Palantir Technologies has had an extraordinary year so far, with its stock price rising by an incredible 96% since the start of the year. This dramatic increase has been driven by strong momentum coming from both public sector organizations and private businesses that are increasingly adopting Palantir's advanced data and artificial intelligence solutions. With the company scheduled to announce its earnings for the second quarter in early August, market participants are eagerly watching for what comes next. Analysts on Wall Street have set their expectations, anticipating that Palantir will deliver earnings per share of 14 cents and generate approximately $937.5 million in revenue during the second quarter. This forecast, if met, would further confirm Palantir's upward trajectory and ongoing success across its growing portfolio of contracts and partnerships. In the lead up to this earnings report, one of the more respected analysts in the financial community, Greg Moskowitz of Mizuho, has made a significant revision to his outlook on Palantir stock. Previously, he had rated the stock as underperforming, but he has now upgraded it to a neutral rating. Additionally, he increased his price estimate for the company from $116 to $135. Moskowitz, who is considered a 4-star analyst within investment circles, explained that this upgrade was based on consistent and encouraging performance by Palantir over the past several quarters. He highlighted that both the commercial side of the business and the government sector have shown meaningful growth. A major reason for this positive momentum, according to Moskowitz, has been the expanding interest in Palantir's artificial intelligence software tools and data platforms. These products have become increasingly important for clients looking to streamline operations, analyze large datasets more effectively, and improve decision-making in real time. He also mentioned that the company's results from the first quarter had outperformed his expectations. Building on this trend, he now believes Palantir is well positioned to deliver its 5th straight quarter of revenue growth when it releases second quarter earnings in early August. Moskowitz also drew attention to broader market trends that are currently working in Palantir's favor. Specifically, he mentioned the company's increasing relevance in artificial intelligence, ongoing modernization efforts in government infrastructure, and the continued push toward industrial automation. He argued that all of these factors support a longer-term outlook of sustained growth for Palantir. Despite his optimistic view of the company's strategy and recent execution, Moskowitz did sound a note of caution. He warned that Palantir's current valuation is significantly higher than that of most software firms. This means that if the company's growth slows down even slightly, the stock could come under considerable selling pressure. Investors should be aware that while the company has strong tailwinds, any signs of stagnation could lead to sharp corrections in the share price. When looking at broader analyst sentiment from Wall Street, there is currently a hold consensus on Palantir shares. This consensus is based on 16 analyst ratings made over the last 3 months, which include 3 buy ratings, 9 hold ratings, and 4 sell ratings. The average price target based on these evaluations is $106.71. When compared to current trading levels, this estimate implies a potential downside of approximately 28.2%. So while the short-term outlook may appear favorable, the long-term pricing remains a topic of debate among professional analysts. Palantir stock surged to yet another all-time high during the trading session on Tuesday. This jump was fueled by investor excitement over the company's potential to benefit from what is expected to be a massive wave of spending on artificial intelligence. The optimism surrounding the stock was amplified by the appearance of Palantir's chief executive officer at a major industry summit held in Pittsburgh, where top executives and government leaders gathered to discuss strategic investment in artificial intelligence and energy infrastructure. During this event, several companies committed to investing tens of billions of dollars in the development of new energy facilities and data centers. Adding to the growing confidence in Palantir's prospects, analysts from Wedbush released a note last week that stated the company could be in a strong position to benefit from increased government spending in both North America and Europe. They also emphasized that artificial intelligence policies backed by the Trump administration could act as a further tailwind, supporting Palantir's expansion and future earnings potential. Since the start of the year, Palantir stock has nearly doubled in value, making it the best performing company within the Standard & Poor's 500 index so far in 2025. This impressive rally has been powered by increasing demand for artificial intelligence capabilities from large businesses and government clients. Many of these clients have awarded Palantir significant defense and technology contracts. On Tuesday morning, the stock reached an intraday high close to $151. However, by the end end of the session, it pulled back slightly and closed at $148.58. Now let us take a closer look at the technical side of the stock's chart to get a better sense of where things might be headed. Recently, Palantir shares had been trading within an ascending triangle formation. On Monday, the price broke above the top trend line of that triangle, and the stock closed at a new record high. This kind of move is often interpreted as a signal that the stock could continue climbing higher. The Relative Strength Index, which is a tool used to measure momentum, also reflects a bullish outlook. While the indicator is currently pointing upward, it is still below the threshold that signals the stock is overbought. This suggests there is still room for the stock to move higher without running into excessive selling pressure from traders looking to lock in profits. To forecast how the current upward movement might develop, investors can apply a tool called the bars pattern. This charting method involves taking an earlier trend in the stock and using that pattern to visualize possible future price movements. In this case, analysts examined the upward trend from a previous flag pattern to the formation of the ascending triangle. They then placed this pattern starting from the triangle's top boundary. The result indicates a potential upside target near $195. If the stock continues to behave in a similar manner to past movements, this rally could extend through the end of August. However, if the bulls fail to maintain support above the upper edge of the triangle, a pullback could occur. In that scenario, the price may retreat to around $125. This level sits just below the 50-day moving average and is aligned with the peak observed in February. It also coincides with a period of sideways consolidation on the chart that occurred through much of May. If the correction becomes deeper, the next support level to watch would be near $107. This zone has historically acted as a strong foundation, especially during the brief dip in early May that followed Palantir's breakout after earnings. Investors might consider this area a favorable entry point if the stock experiences another short-term decline, as it would represent a reversion to a key technical and psychological level. Essentially, Palantir Technologies has seen its stock price nearly double in 2025, climbing 96% year-to-date, driven by strong demand for its artificial intelligence software from both government agencies and private enterprises. With second quarter earnings expected in early August, analysts predict earnings per share of 14 cents on revenue of approximately $937.5 million. Greg Moskowitz of Mizuho upgraded the stock from underperform to neutral and raised the price target to $135, citing ongoing revenue growth, increasing interest in Palantir's artificial intelligence tools, and strong performance in both commercial and government sectors. While he acknowledged Palantir's impressive momentum, Moskowitz also warned about the high valuation, suggesting downside risk if growth slows. Analysts currently have a hold consensus rating on the stock, with the average price target of $106.71, implying a possible drop of over 28%. The company's CEO, Alex Karp, recently attended an artificial intelligence and energy summit alongside Donald Trump, during which tens of billions of dollars in infrastructure and data center investments were announced. Wedbush analysts see Palantir well-positioned to benefit from rising federal spending and pro-artificial intelligence policy trends. Analysts using chart patterns suggest a possible climb toward $195 with key support levels at $125 and $107 if the stock pulls back. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.